Hey, everybody, I'm Paul Moore from Bigger Pockets and Wellings Capital, and I am so honored and privileged to join you on this Saturday morning at 8 a.m. Pacific, 11 a.m. Eastern, and somewhere in between for everybody else. So, want to find out where you're from today. So, type in your name, where you're from, and if you're willing to, please share this episode with others. We would love for Bigger Pockets, YouTube, Facebook to know that this is valuable content for you. Today, we're going to talk about Crisis Investing 101. And no, this is not a repeat of a prior episode. That's our overall theme for this time. I don't know if you guys heard, but there's this crisis out there. It's some virus or something. You probably haven't heard much about it, but we're going to address that here. We're going to talk specifically about when to start investing again and what to do until then. So, hey, Gabriel from Iowa, Illinois area, Angela from Chicago. Hey, Brian from Northwest Ohio. Hey, Brew from New York. Ace Walker is in the DMV, not far from me. How you doing, Ace? So glad you all joined us. Hey, Ken, Philadelphia. Chris from Lynchburg, Virginia. Hey, Chris, my neighbor. We should get together for coffee. Come on. Jorge from New Jersey. Jerry from Walnut Creek, California. Thanks for joining, everybody. We're going to jump right into our topic. It's Crisis Investing 101, when to start investing again and what to do till then. So we've heard a lot of folks say, hey, it's time to jump in. I want to jump in now, and I want to start getting those amazing deals. They might have heard about one deal or two that were better than most, but I'm here to argue that it's not the time to jump in yet. And I think the statistics will back me up. You know, they say, Mark Twain said, history doesn't necessarily repeat itself, but it does rhyme. Now, there's no actual evidence that Mark Twain said that, but I like it anyway. History rhymes. And so if we look back at the most recent history, we're going to find out that we're going to learn some lessons. I actually learned something that I had not known when I was preparing for this. So I can't wait to share it with you. But first, we're going to talk about the Fear and Greed Index. January 17th, 2020, everything looked amazing. There was some news of some virus out in China, but the 89 on a scale of 100 is amazingly high. Extreme greed, meaning people were buying. And we were warning you at Bigger Pockets that it wasn't necessarily the best time to buy. Well, look at this. Just 5 weeks later, March 6th, extreme fear. People were selling. People were running away from the market, especially the stock market. May 8th, a week ago, it was at 43. But today, yesterday at least, it dropped to 39. So what's going on? I don't know. It looks like there's some pessimism coming in. I think maybe people are listening to people like Ray Dalio, Howard Marks, looking at Warren Buffett did, dumping Goldman Sachs stock. JCPenney filing bankruptcy yesterday. How old is that company? Probably 100 or more years old, filing bankruptcy. So there's a lot of news that's starting to cascade down to the street. We at Bigger Pockets, want to be beacons of hope and optimism, but we also want to be realists. And we want to say that though we don't want to see anybody lose their home in the upcoming crisis, it's just a fact of life. It's just a fact of capital markets. It always happens. It always will happen. And so you can actually be part of the solution, as we'll talk about later when we talk about subject to and lease option sandwich opportunities that you may have in the coming months. So let's look at the foreclosure rate in the United States from 2005 to 19. Okay, don't worry about the numbers so much. Look at the peak. In 2007, it started to go up. In fact, it looks like it pretty much doubled from 2005 to 2007. But then it went up again, almost double again to 2008, and then more than double in 2009 and 10. It started to taper off by 2011, 12, 13, and it steadily declined all the way through 2019. Okay. So keep those years fixed in your mind. Now, that's the national foreclosure rate. Now let's look at prices. So my good friend Barry he and I talked this morning via text, and we were talking about Phoenix. And I said, Barry, Phoenix is one of the greatest places to make a fortune in real estate, because look at those swings. Look at the wild swings from price per square foot of 95 in 2000 or so up to 182 by 2000, looks like late 2000, looks like 2006. Then it dropped to 82 in 2011, 5 years later. The average has been a 3% increase over 19 years, but the power and the profitability of a market like Phoenix or Las Vegas or some markets in California, many markets in Florida, the power is in these huge swings. You can be a victim of those swings if you're like the herd, or you can be a smart, bigger pockets investor and you can take advantage of these swings. Okay, so that's Phoenix. Now think about this. There's outliers above that, over and above that, and above and below that blue line. So if 82 was the average per square foot in 2011, I'm thinking that, you might be able to get one from a bank or a distressed seller for, some fraction of that, maybe 40, 50, 60% of that. You might be able to get, if you're a savvy investor and if you're prepared, you might be able to get one for $40 or $50 a square foot. We all know that happens. I've told you before about a friend of mine who took me to his home in Fort Myers, Florida. It was a 2007 home with a pool in sort of a semi-indoor pool in a screen porch behind it. Beautiful home, 4 bedrooms, 2.5 baths, granite countertops, all that stuff. Fort Myers, Florida. He got it for $55,000. He bought it right from a bank. I think that could happen again. So here's a national index of home prices. You can see they've followed a similar trend, but not as extreme as the sand states like Arizona, Nevada, Florida, and California. Now here's what's interesting. Home prices, as you can see, in Scottsdale, or Phoenix, I should say, hit their bottom in 2011. That's a full 3 years after foreclosures really went on the rise in 2008. We talk about the 2008 financial crisis, but it was 2011 till Phoenix hit bottom. Let's see on a national level. Look, on a national level, it was early 2012, first quarter of 2012, when home prices hit their bottom. So that's interesting because it's long after the height of the crisis, long after the stock market took its worst plunge. And so this is interesting. This is U.S. home flipping, gross profits and returns. Now look at this. The returns, the ROIs on flipping were not in the years of the greatest foreclosures. The greatest number of foreclosures being in 2009 and 10 were some of the lesser years of the profitability of home flipping. Home flipping got more profitable after the height of the crisis, and you can see too that it corresponded, home flipping profitability corresponded more or less to home price indexes, okay, or indices, excuse me. So that's sort of interesting, and it reminds me that at the height of the crisis, that might not be the time to invest in real estate, because real estate, unlike stocks and bonds where you could lose 10 or 20% of your portfolio value while you go to lunch, real estate's very, very slow to react relatively. And so real estate, honestly, at this point doesn't look much different than any other time. I work with a team of friends at Smith Mountain Lake in Virginia. There's about 6 or 7 realtors, and they said that that Sales have exploded this week at Smith Mountain Lake in Virginia. There, I know of 3 homes, I think, that have multiple offers on them this week. And so real estate's way behind the curve, which is a benefit to you. So putting these 3 important graphs together, you've got the U.S. home flipping profits, you've got the foreclosure rates, which you can see precede the flipping profits by 2 to 3 years, and you've got the Case-Shiller price index, which also, again, the bottom lags the foreclosures by a full 2 to 3 years. And so that's good news for you. That means you have time to prepare. And if you're a seller, let's say you just finished preparing a flip house, you still have time to get it on the market and maybe get it sold before things go awry. So today we want to talk about when to start investing again and what to do until then. So I'd like to take your questions on those specific questions, but specifically what to do until then. So I want to throw out a few thoughts. Number one, it's a good time to prepare yourself. It's a good time to listen to podcasts. It's a good time to read books. Bigger Pockets has the greatest selection, the greatest library of real estate books on the planet. We've got some of the major bestsellers in real estate, month in and month out, year in and year out. You can get those at the Bigger Pockets bookstore. We've also got a book that Nikki, our producer, is going to flash on the screen there, and hopefully in a few minutes, reminding me what the name of it is. I think it's Recession Proof Investing by Jay Scott. That's now available for the first time in paperback, not just in audio and on Kindle, but it's so popular that they're actually producing a paperback version of that. There's also the 3 Bigger Pockets podcasts. You ought to check those out. There's all kinds of other podcasts you can check out. There's preparing yourself. There are so many different things you can do. This is not a time, folks, to watch Game of Thrones reruns. It's not a time to, brush up on your card playing skills. This is a time to prepare. It's going to be great for you if you look back 5 or 10 years from now and say, I took advantage of that time, that crisis, that time at home, that time where work was different than usual, to prepare myself. Secondly, prepare your team. Your team would include maybe mentors, maybe people you want to mentor, maybe partners you want to partner together with. There are, 7 different ways to get into commercial real estate. And we've talked about that here before. Well, many of those include building a team, and you should consider that as well. You should also build your tribe. Now, your tribe is people who might want to follow you or people who might want to invest with you. That could include bankers. You should be getting to know bankers right now for potential repos, REO. But should also be a time where, you can get to know them for pre-foreclosures, and foreclosures. I'm planning on doing a distressed debt fund when the time is right. That's a lot of work, but we've got a couple years to plan that, because I think that the height of the distressed debt problems is going to be 2021 or 2022. And so you can prepare those who might want to invest with you. That could be family and friends. That could be people with IRAs who want to invest in what you're doing. It could mean you start a podcast. It's a great time to start a podcast. A lot of people are listening right now. And a friend of mine, Whitney Sewell, actually said, he said that once he started a daily podcast, his business went through the roof. Now, daily podcasts are a lot of work, but hey, anything good is a lot of work, right? So prepare yourself, prepare your team, prepare your tribe, and get ready for what could be one of the greatest buying opportunities, greatest acquisition opportunities in real estate in your life. Some people think it won't be as bad as 2008. Some people think it'll be a lot worse. I can tell you we've got a lot of things that are coming together. Howard Marks, who is with Oak Tree Capital, he has been the king of distressed debt since he started in 1988. He says he's building the largest distressed debt fund ever in history. He was buying 500 million in distressed assets and distressed debt in the financial sector in the fall of 2008, 500 million a week. He's planning on doing 15 billion in total distressed debt this time. You can see Warren Buffett is sitting on the sidelines mostly. He just sold a lot of his Goldman stocks yesterday, but he's sitting on the sidelines for the most part because I think he thinks that there's a bigger bottom to come. A bigger bottom to come. Yeah, right. So anyway, that it would be in the equity market, but I think in real estate as well, there's going to be a lot of opportunities. So it's a great time to prepare. It's a great time to be ready. And it's a great time to have your ducks in a row to be where you need to be at the time that you need to be. And so again, I'm thinking 1 to 2 years, but possibly even as long as 3 years from now. So thanks for your question. If you've put in a question more than a few minutes ago, I would say I'm not probably going to get to it. So I'm going to try to start here with Bradley Vranish. Bradley says, so now is not the time to invest? Great question, Bradley. Thanks for joining us. I think it's best to wait a little bit. So I would say the time is now to prepare, and that's great news for you. Jonathan says, what if you're in a 1031 exchange, take the tax hit and want it out, or invest in a pretty good multifamily deal right now? Okay, so I'm going to be very opinionated here. I have some friends who are buying multifamily right now, and that's okay. But I think, Jonathan, it might be better to consider having cash. Now, there are some alternatives to 1031 exchanges. There are alternatives such as installment sales. I'm actually working with a guy in Southern California right now to do 2 installment sales, 2 different clients, friends of mine who are doing the sale. And instead of doing a 1031 exchange, traditionally, they're doing an installment sale, which would be allow them to put cash in their pocket, but kick the 1031, the capital gains tax, down the road. I'd highly recommend that. If you don't know about that, I wouldn't just look up installment sale. If you've got a 1031 exchange, Jonathan, you ought to get hold of me, and I can tell you more about that. You can private message me. Devin Hughes says, Adam Zatt says, question, can I withdraw from my traditional IRA and deposit it back at the end of the year without any penalty? I think you have 3 years, Adam. I think you can take $100,000 out. That may be just in a 401k, but I think a traditional IRA, you can do that as well. Devin says, would you recommend liquidating underperforming properties? Devin, I think if you can, it would be good to do that. It might be harder to sell, but I think it'll be harder to sell a year or 2 from now than today. So if you can sell today, I think you would be better off. Lewis says, in preparing, we need funding. Who should we reach out to for best rates and service? I'm at the epicenter in the Bronx, New York area, Mr. Moore. Luis, I would say go to your local or regional bank or credit union. Those would be the places I would go for the best rates and service and the highest likelihood that you're not going to have them come back on you and can your deal later. So, hey, Lee Yoder from Lebanon, Ohio, welcome today. Should I go ahead and sell my small multifamily property to capitalize on these high prices before prices drop? Lee, if it was me, I would. I just sold a 125-unit apartment building, and I couldn't be happier I couldn't be happier that we sold it. I'm really glad we did. And so, Lee, again, I don't have a crystal ball. It's a fool's errand to try to predict the size, the timing, the shape of the recession that we're going to face. But again, we've got a lot of things coming together at once. You've got a largest pandemic in 102 years. You've got the largest economic shock in 90 years at the same time. You've got the largest federal stimulus and money, is that a new word? Money printing thing going on of all time. You've got the highest corporate debt and other types of debt of all time. You've got the highest US debt of all time. You've got the highest number of retail closures imaginable. And so you've got a lot of things coming together. And so I don't know what is going to happen, but I think that it's likely that you're going to see a lot of difficulty in the markets. Angelica, I think I'm saying that right. Angelica says, hi, I just joined after my morning workout. Realtor told me Arizona has a lot of homes that they are not putting on the market. Why are they holding off? It's really funny. Last week or two, I've been asking, why are home prices staying the same? Why aren't they starting to ebb downward? I think it's because the supply has dropped so much. Okay, I mentioned Smith Mountain Lake in Virginia earlier. The supply is actually not enough to serve the demand. The demand just shot up in the last couple of weeks. I think people have been sitting home. They've been looking at houses online. They've been dreaming about going to a lake, dreaming about some distancing from their neighbors. And there are people flocking to Smith Mountain Lake to buy right now, but there are less sellers than we would have expected. And so, Angelica, I think that people are just assuming there's no buyers, which is what I would have assumed. Would have been wrong. I think people don't want necessarily to have their house open for touring. And so a whole lot of listings have been canceled. And I think that's what's going on, Angelica. I don't know other than that. Stephen Holiday. Hey, welcome back, Stephen. You have some background in rental storage. How hard would it be to convert a Kmart, Sears, or JCPenney to storage? You're speaking my language, Stephen. So a friend of mine, AJ Osborne, who was on the Bigger Pockets podcast, July 4th, 2018, easy day to remember. He actually converted the Reno, Nevada Super Kmart. He bought it. He sold off the parking lot to apartment developers first. He had $7.5 million in it. That was $2.5 million of his and his family's cash, $5 million in debt. He converted it. He cut the Super Kmart in half to make more exterior walls. He made it into a very nice self-storage. When it was 40% leased up, I was on the phone with him in December 2018, and he got an offer from some REIT, a large publicly traded institutional investor, for $26 million. Remember, he had $2.5 million in cash in it. So that was like a 10x ROI, cash on cash, if he would have sold it, but he didn't. He decided to hold on to it. It's a great strategy to convert a Kmart, a Sears, a JCPenney, etc. You're going to want to look for a software called Radius Plus to make sure it's in the right location. You're going to want to check the vehicles per day. Of course, they should be good in a location like that, unless it's in a mall. Then I really would question a mall for self-storage, although I know it has worked. You're going to want to check the demographics, the visibility, the area, the decline or rise of the population in the neighborhood, and of course the square feet of self-storage per person. You're going to look for a number of about less than about 7 or 8 square feet per person in a 3-mile radius in general. Shiraz Ali says, where should you put your money for this next year or two? Shiraz, Buffett's got his in T-bills. And basically cash. So a lot of people think that's a good idea. When you do keep your money in cash at less than 1% interest rate, you're basically losing money because in theory, inflation is rising at 2 to 2.5% per year. You may want to consider putting it into a note, like a distressed note. Our own Dave Van Horn has PPR Note Fund, and he has He has a place you can park your cash, and you can take it out with, like, I think it's 30 or 60 days notice. And he pays really, really good returns, like 7-8% or so. And he can even pay more if you're willing to tie up your money longer. So Shiraz, I hope that was helpful. Hey, Jamal, what about buying a duplex to live in and reduce your cost of living? Would you hold off on that as well? Jamal, I would say that, it's been really hard to find duplexes for a long time. They've been seriously overpriced, and they haven't come down much in the last few months. So I really love that idea of house hacking, working into a duplex, but I just think the prices are going to be much, much lower in about a year or two. If you can hold off, you may want to conserve your cash. What you might want to consider is moving to an Airbnb. Now think about that. That sounds crazy, but think about all the Airbnb people who are really, really in trouble right now. They might have built or bought or furnished, rented and furnished an Airbnb unit. They're not doing well right now. I asked my friend in Miami, Florida 2 weeks ago, I said, why don't you check it? He couldn't find a place to live anywhere. I said, why don't you check for an Airbnb? And I talked him into it. He found a luxury Airbnb for cheap. And he could never find that before. So think about it, Jamal. And, again, I would consider waiting. That's just my opinion. Carrie Cheshire says, I'm sitting on $150K in equity on a property. Should I turn this into cash to be ready for potential deals in the coming downturn? Can you get an equity line of credit? I would go to a local, regional, or credit union and try to get a line of credit. Then you have the best of both worlds. You've got the availability of the cash, but you don't have to be paying interest on it till you need it. So that's what I'd consider, Carrie. If that doesn't work, yes, I would consider getting the cash out if you can. Adrian Bonilla says, I'm in New York City. Everyone says bigger markets will get hit hardest. Will multifamily prices drop enough where we can scoop up great deals? The gateway cities like New York, LA, San Francisco, Boston, there's just institutional investors who want property there, and they've been wanting it for, well over 100 years. And so it generally might not drop as much as you think in areas like that, because the smartest people know this is just a cycle. The smartest people know that it's going to jump back. It's going to come back. And I don't think New York City might drop as much as you think. That's my opinion. I could easily be wrong. Rajesh SV says, I'm from Dallas area. I'm a first-time home buyer. Should I wait, and how long? Frisco, Texas ranks lowest for recession impact. Yes, it's that whole area is very, very low for recession impact. Is it worth the risk? I would wait. I think that, again, there's outliers. There's going to be people who are hammered from this recession, and they are not, there are opportunities. You're going to have opportunities you don't have now. So I really think it's a great time to wait just a little bit longer. I mean, you'll know so much more in a few months. Sean Murphy, hey, Sean, 3 to 4 units have better economics than duplexes. I would agree. I agree, Sean. Thank you for sharing that. By the way, you guys can share answers with each other. I don't have all the answers, and I'm going to get stumped on something today, and I've already been wrong on some things, I'm sure, because every forecast is wrong. The question is, by how much? So feel free to answer each other, and feel free to argue with me. Darnell Walker says, can you get a home equity line of credit on rental properties? You can. Again, I think you need to go to a smaller bank, a local bank, a credit union. There's a website that's it's got quite an expensive program on it that I don't recommend. I mean, I don't want to say anything bad about it, but there's a website. I think it's replaceyourmortgage.com. There's also a YouTube site. I think it's called VIP Financial Education. They talk about where to get home equity lines and what banks are most aggressive in giving those equity lines. So Darnell, I would look there. Sonya Bravo. Hey, Sonya, what are the pros and or cons of snowbird mobile home parks? Well, mobile home parks that are age restricted to, let's say, 55 and above. My hair's getting gray. are going to be some of the best mobile home park investments out there. The age-restricted mobile home parks are they're projected to do better than others in the upcoming recession. So Sun Communities and also Equity Residential, Equity Lifestyles, Sam Zell's company, they have a lot of those. And so I think, I don't think that there are any real cons. I mean, you say snowbird as in, maybe, so it's possible that there are people who are going to be coming and going. But mobile home parks, I think you might be, when you say snowbird, I think more of an RV park. So, okay, 6M Abbott says, have a HELOC for $72,000. In the HELOC, by the way, is home equity line of credit. In the start of a kitchen renovation, is it smart to use about 30 or 40 on the renovation now and pay it off as quick as possible to have the full amount available to invest in a year or so? It's exactly what I would do. It's exactly right. You got it. So I think you nailed that one. Jonathan again says, would you recommend offering like 20% less on multifamily buildings? And if it hits, then maybe it's worth it now. Yeah, Jonathan. I mean, again, depending on all the economics, I would say that would be a good strategy. I know people doing that. So I would recommend that you consider something like that for sure. Let's see. A1 says you just got to call the banks. I called 20 before I found one. And I think you're referring to a home equity line of credit for a rental property. So yes, absolutely. Great strategy. Were you one of the authors of Wealth Can't Wait? No, but I saw a movie when I was a kid called Heaven Can Wait. But no, I'm just kidding. I don't know. I don't know about that book. Sorry. But it sounds like a good book. Adrian Bonilla says small multis go for over or just about 1 million. Will prices drop under that in your opinion? Yes. I mean, all things being equal, I believe on the same property, the prices are going to drop. In addition to the factors I mentioned earlier that are all colliding at once, you've got something like 11 or 12 times. I know it may be temporary, but 11 or 12 times the worst unemployment hit we've ever had since the 70s. So 11 or 12 times, 1,100 or 1,200% more unemployment than before, plus all the other things I mentioned a moment ago. How could it not drop? How could it not, Adrian? That's what I think. Jerry says, I have 3 family in New York City. Should I sell or hold in this crazy market? Jerry, I don't know. Maybe. I mean, again, it's hard to predict, but I will say a lot of people were glad they sold in 2006 and 2007, right before the roller coaster took the long ride down. And a lot of people were glad they had cash in 2011 through 2013 when they grabbed properties. People like Ken McElroy, who got, I think it was $1 billion in multifamily and other properties like self-storage and rode that roller coaster up. And by the way, he sold off 200 million of his properties in 2019, getting ready for this. Now, of course, he didn't know what this would be, but he knew something was coming. Ken McElroy's a smart guy. You might want to check out his website. Toby Madigan says, where was it that you were saying I can park my money in a 7% note? How do I sign up? Okay, so Dave Van Horn is one of our writers, long-standing, most faithful writers here at Bigger Pockets, and he's got a company called PPR Notes based west of Philadelphia, and he's got some opportunities for basically to invest in a note fund that has an opportunity to cash out. I think it's in like 30 or 60 days. You could connect with Dave Van Horn and tell him I said hi. So Island Breeze says most of the unemployment claims are temporary or furlough, not permanent. Yeah, I agree. But I would argue that, so we had 12,000 retail establishments close in 2019 in one of the greatest economies in American history. That's just going to continue to accelerate with COVID in 2020. I mean, we saw JCPenney file for bankruptcy yesterday, if I read that right. So I think a lot of these are going to be permanent. Here's another example. Now, this isn't unemployment, but let me just say this. I spent some time yesterday with a friend who he's got several $1 million in rentals. His company rents office space around the DC metro, Rockville, Maryland, etc. And this friend told me that they were going to try to get out of their leases in some of these millions of dollars of commercial leases because they realize they can work from home. That's not an unemployment figure, but that is going to impact the economy. And it's not going to be good for commercial office space. I think it's going to be disastrous, by the way. That's my opinion. Okay, you can find Dave Van Horn's book. He's also an author with Bigger Pockets. It's called Real Estate Note Investing. You can get it at biggerpockets.com/store. So we're going to leave that up there for a minute. And I'm going to tell you that one of the smartest, if not the smartest thing I've ever done in my 30 years in business was join the Bigger Pockets community and actually upgrade my membership to a pro level. So I highly recommend that you consider doing a pro or premium level with Bigger Pockets. You'll get access to forms and discounts and all kinds of things. I mentioned earlier how important it is to prepare during this time. One of the ways you can prepare is by being a Bigger Pockets Pro or Premium member. So Adam Zatt says that it's a 90-day PPR notes has a 90-day out. So that's pretty good. It might not be exactly what you want, but I think the interest rates on those are pretty high. I think they're probably 7% or more. The part-time landlord, part-time landlord says, do you think it's possible to become a big investor without syndicating? I mean, by flipping through 1031 exchanges and cash out refinances to expand your portfolio. Absolutely, I do. There's 7 ways to get involved in commercial real estate that I've identified to get to the top, and that's the first of the 7 ways. I met a guy in Arlington, Texas, suburb of Dallas, and he took $1,000 bonus from his job as a mechanic in 1993, and he somehow talked a bank into selling him a duplex with $1,000 down. He fixed it up, he rented it out, and he sold it for a $27,000 profit. He took that 28 now, and he actually went and bought a larger property. I think it was a 4-plex. He did the same thing. He did the same thing into an 8, and then a 12, and then a 20. When I met him, he was selling a 132-unit apartment complex for $11 million, and he was getting ready to jump up again. And that was in 2016. So it took him 23 years, but he was sitting pretty. He was actually getting ready to buy an expensive ranch outside of Dallas. So honestly, it's seriously a great way to go. Deborah Whalen says, what's the best place to go take advantage of pre-foreclosures? Deborah, I would say the sand states, if you can get near them, like Arizona, Nevada, Florida, California. I'm personally going to be looking at those as well. Now, I'm going to use a different strategy. I'm going to use a subject to or a lease option sandwich strategy, where I'm going to go and basically try to rescue the foreclosure from foreclosure, the pre-foreclosure, I should say, from foreclosure, catch up the loan, and then rent to own it to somebody else. So it's called a lease option sandwich on a subject to mortgage, meaning subject to the current mortgage. Okay. So that's what I would recommend. Florida is, again, just ripe for these, or it will be when the time is right. Ararat, I tried to roll the R. Bad idea, Paul. Hi, Paul. What do you think of being a licensed agent? Would it be helpful for doing seller finance and lease options? Will motivate homeowners try to do deals with agents, or will they be suspicious? There's some of each. I've run into people who are suspicious of agents and they don't want to deal with agents, but I've run into a lot more people who are going to recognize you as a professional. You'll have an inside track on new deals. You'll have a lot of education along the way. You might spend $2,000 or so to get that license but there's a lot of reasons to do it. So I'd say more reasons than not. Hey, Shelly Toombs, welcome. Thanks for joining today. Jerome Wiley says many of the local and state employment issues won't be back since they're sales and property tax driven. So, I think that it is possible. I'd like to hear more what you're thinking about that, Jerome. They are property sales and property tax driven. And there's, with this huge drop in local sales and the possibility of a drop in property taxes, though there's no guarantee of that, that, down the road, I think it's going to hurt these localities. So, we already have some that are in record amount of debt. And, we've seen some since 2008 that, were basically in bankruptcy themselves. Places like Detroit, where I used to live. Deborah Whalen says, what's the best place to go to take advantage of pre-foreclosure? Yeah, I already mentioned that. So again, the Sand States, Florida, Arizona, Nevada, etc. So if you haven't submitted a question yet, this would be a great time for you to add a question. You can get Dave Van Horn's book on note investing at the Bigger Pockets store. You can get Jay Scott's book on recession-resistant investing at the Bigger Pockets store. And I'm going to recommend something else. As you're preparing, if you plan to be working with syndicators as a passive investor, you really need to get Brian Burke's new book. Brian Burke's new book is The Hands-Off Investor. And you can get The Hands-Off Investor at biggerpockets.com/syndication book. You're definitely going to want to get this. If you're a syndicator, you need to know what people are going to be looking for when they evaluate you. If you're an investor, you're going to need to know what to look for in a syndicator. You really need to get this book. Brian Burke is a friend of mine. He's putting together a distressed asset or debt fund as well. He's hoping to raise $100 million for that. He's actually done, I think it's been like $500 million or $1 billion in real estate. He's been on the Bigger Pockets podcast 3 times, including 3 weeks ago when he rolled out his new book, The Hands-Off Investor. I'd highly recommend you check that out. So Coaching with Candace says, what are your thoughts on the Chicago fix and flip market? Is it now a good time for a flip, or will it be hard to sell to get out of a hard money loan? Yeah, I think it's a pretty tough time right now because you still got sellers thinking the price should be here. You're going to soon start getting buyers thinking the price should be here. And that gulf is going to cause a problem for flippers in the near future, I predict. Chicago's already been tough because they've got a net population migration loss going on right now. They've got people moving out because of the oppressive taxes and other government stuff going on there. Now this COVID thing's causing people to maybe say, I predict they're going to say, hey, where do I really want to live? Where do I really want to raise a family? I mean, I personally moved to the Blue Ridge Mountains when I sold my company to a publicly traded firm 23 years ago. My business partner, the original founder of the company, he moved to the Colorado mountains. Well, I think a lot of people are going to be looking for where they really want to live as a result of this. And so I'd be a little wary of Chicago. Sarah Kirkpatrick says, Paul, thanks so much for sharing your wisdom. Thank you so much, Sarah, for the thanks. Brian Major says, I bought a cheap property by using a couple credit cards. Good for you. Can you take any of that off on taxes? I don't know. I don't give tax advice very much, but I don't know the answer to that one. And should I put a loan? I assume you mean the interest payments on that. Check with your tax preparer. And should I put a loan on it or keep it debt free? And so I would say if you can get an equity line so you can, so you're able to free up cash or have cash availability, I would totally do it. So Nikki, our producer, is going to shoot a few more questions over, and then we're going to wrap up a little bit early today. So the part-time landlord says, do you think short-term rentals will make a comeback after the current situation ends? Do you think short-term rentals, do you recommend short-term rentals as a part of a person's investment portfolio? I don't know yet. I kind of think that they will. I think Airbnb and corporate leasing will be strong again. I've got a great program I went through to learn how to do that, and I recommend it. I've been recommending it for years, but I don't really know how this is going to go. So, let's see. Daniel Gonzales, Verna Littleton says, I read an article yesterday that states that appraisers will soon start saying we're in a declining market. Yes, I agree. How will this affect values if this happens soon? Yeah, I think residential and commercial properties are both going to see a decline. And again, there's nothing in all the economy and nothing in the experts I'm reading that would disagree with that. I just can't imagine it going any different. Hey, Kevin Roop, thanks for joining. One of my heroes, an investor in the DC area. Daniel Gonzales says, any strategies that you would want a newbie to watch out for if looking for property soon, or is waiting best? So Daniel, we're still investing. My company, Wellings Capital, is still investing, but we're investing in very opportunistic mom and pop owned mobile home parks and self-storage. We're looking for opportunities where there's a lot of meat left on the bone and a lot of opportunity to upgrade. For example, since this whole mess started, we invested. There's acquired a $7.1 million mobile home park with an operating partner. It should be worth 12 to 14 million once 3 fairly simple changes are made. And so already turned down an offer of $9 or $9.5 million on that property. So Ben M says, how do you suggest structuring a partnership with a cash investor for rentals or flips? Ben, what I recommend is if you've got a cash partner, they get interest, let's say 1% a month on the money they put in. And then you, if you're the other party, the person doing the work, you get paid, let's say $15 or $20 an hour for the time you put in. And you take that all off the top, and then you split the profit evenly after that. So you take the hours and the interest off the top at the end, and you split the rest. That's my opinion. Flipping properties or buying rental property and then rent them out. I'm not really sure what the best strategy is right now. Like I said, Tawfiq, I would just wait a little bit, and I think we'll know a lot more in 3 to 6 months. Ararat says, is getting a license an advantage for an investor or not? Yeah, it's more of an advantage than a disadvantage. It can hurt. I do know people who won't get a license because they feel like it hinders them. So you have to really weigh out your specific goals and situations. Sandra Lopez says, what's your opinion on selling my primary house to have cash available? If I was going to do it, I would do it today. I mean, I would get it on the market like this week. I wouldn't wait, but I think it's a great strategy. And it's something that I honestly wish I had done, but wasn't able to do it. Charmaine says, we are first-time investors with 100,000 cash. Good for you. Congratulations. Congratulations on your wedding too. Wanting to start a real estate portfolio, what do you recommend? I would just keep hoarding cash for now, Charmaine, and look for opportunities. I would actually recommend a lease option sandwich or a subject to. Then you can take that 100,000 and maybe get 20 homes under control rather than just 1 or 2 or 3. So that's what I would consider. If you don't know how to do that, you can go to Bigger Pockets writer Chris Prefontaine has a book called Real Estate on Your Terms. It's not easy to find, but Chris Prefontaine, Bigger Pockets author, has a great book about that, and it'll teach you to do exactly what I just said. Pete Bizzano says the inventory in Boston was extremely low before the pandemic. We're seeing buyers still purchasing, though, and many properties are selling for aggressive prices and often over asking. I'm a buy and hold guy, but I don't see our market coming down drastically. It seems to me that Boston might do better than some. And I think that it will not come down as bad as some other markets. I think you're right in saying that. As far as going outside of Boston, I think that you'll see that, even an hour outside of Boston, if you can get something somewhere else like that you might be able to find better prices and better differentials between what the prices, were before and what they're going to be now. So Pete, I don't think that was a great answer, but hopefully it helped a little bit. Toby says, can you explain a little better why it's better to wait if I need a home? I can find one for $80,000 in an area like Michigan. Renting an Airbnb would be around $1,500 a month, and I couldn't customize. Well, I should have been clear. I think you should go to these Airbnb owners who are really in trouble and try to get them down, like just to cover their very minimal, like half their minimum cost at like $500 a month. That's what I should have explained. Sorry. Toby, my reasoning is, that $80,000 house might be $50,000 down the road. And so that's my thinking. I mean, as an outlier, at least the average might not come down that far, but as an outlier, you might be able to get a pre-foreclosure or a bank-owned property like that. Okay, so Hinnock says, would you say it's a good time to buy right now? No, I think there's probably going to be better times in the future. And I think, Hinnock, that there's a lot of evidence for that. Taru TV says, what do you think about Miami, Florida to buy in 6 months from now? I've got 100,000 cash. How can I buy 10 houses with that? Taru, you can actually probably get 10 or 20 houses under control with less than that if you use Chris Prefontaine's method of buying houses subject to the original mortgage, which would be like basically doing a lease option sandwich. I really think there's going to be tons of opportunities, and I've got a friend in Miami, and who is waiting for the opportunities to hit there. He thinks, based on what he and I talked about, we think it'll be 1 to 2 years from now, if we had to guess. So Get Money says, is it worth it to buy a quadplex and also buy a house to live in, or is it better just to live in the quad and allow the tenants to cover my payments? It depends on your goals. I would consider maybe living in one and letting the tenants live in another. It'd be really nice if you have a property management firm and they don't know you're actually the owner of the property. On the other hand, that might be pretty tough. So Mark Hughes says, currently living in an apartment, planning to move to a bigger city. Do you recommend a fixer-upper duplex or single-family home as my first investment property? Mark, for the same reason I just shared a moment ago with Get Money, I think it'd be a little better to possibly do a duplex, and they consider house hacking in that duplex. So Sapan says, I'm a first-time investor and interested in getting into rentals. Do you suggest I look into turnkey properties starting out, since I don't have know much on rehabs? Sapan, I wouldn't think that this would be a great time to buy a turnkey property because you're basically paying virtually retail. Maybe you are paying retail, and I don't think it's a good time to pay retail. You might have better opportunities in the near future. That's my opinion. Can't prove it. Fareed says, thank you for sharing your experience. What are your thoughts on the market in Southern California regarding rentals, especially with all the rent deferral in a state that is pro-tenant? I think it's going to be, the pro-tenant issue. And, there's websites in California that will show you how to get 6 or 8 or even almost 12 months free rent by dragging it out using the system. I wouldn't really want to be a landlord in California. That alone, the hassle, even if it was profitable, would be enough to keep me out, even though I have mentioned the sand states earlier. So Fareed, for that reason alone, I wouldn't want to do it. But I also think that San Diego specifically and some places around LA have had, large ups and downs, and you might get a discount. Daniel says, any opinions on or concerns with the BRRRR method? Daniel, it's a great method. That's buy, rehab, rent, refinance, repeat. And so, we think it's a great opportunity for you. And I think it's best if you do that, with a home that is discounted even further, which I believe there will be some. So Anthony Romano says, I have $350,000, want to move from my rental. Any suggestions? Well, Anthony, my suggestion would be keep renting for a year and see how this thing pans out. Try to put some more cash in the bank. I always tend to think that it's best to be a full-time investor, a full-time real estate person, not do it on the side, even though Bigger Pockets teaches people to do it on the side. One way to do that is to be to put that into, if you're going to be full-time doing this, take that and buy a $1 million apartment building or $1 million self-storage or mobile home park, or partner your $350 with 3 other friends and buy a $3 million one. That's a lot of what my book, The Perfect Investment, is about. And so I would recommend that. My upcoming book on self-storage is going to have a similar theme and explain some ways to do that. If you're going to invest with a third party, get Brian Burke's book, The Hands-Off Investor, and learn to do that before you invest your $350,000. If you're going to be a passive investor or doing it part-time, really spend the time to learn, Anthony, who you're investing with, and make sure it's somebody you really want to be going through this next recession and beyond with. Monica Morris Smith says, is it better to rent to own a property rather than sell it off now? So if you sell it off now, you're going to have cash available, and that might put you in a place to be in a better position, I should say, to take advantage of the upcoming opportunities. So I would lean towards selling if you can, Monica. If you're a buyer, if you're on the buyer end right now, I would definitely, if you can do a rent to own rather than buy, you have way more options down the road. And if you can do a rent to own rather than rent, in case there's hyperinflation, you'll have way more options down the road. So as a rent to own, on the buyer side, which you didn't ask, I would say that is going to have, you're going to be ahead if you do that. Shelley Toombs says, just downloaded Prefontaine's Real Estate on Your Own Terms from Audible. Okay, I didn't know they had that on Audible. Thank you for sharing that, Shelley. I think you're going to love that book. And there's so many good strategies in there that I highly recommend. So we are down to 3 minutes left. So I'm going to answer a few more questions very quickly. I want to thank Bigger Pockets. I want to thank Nikki, our producer, for doing an amazing job. I'm very thankful that it's a really sunny day. It looks like it's going to be in the 80s out there again today. I'm looking out here at the lake. There's somebody fishing in my yard, though. What's he doing? Anyway, seriously, thank you so much for joining us. I'm really amazed that I get to do this. I'm amazed I get to be here with you every week. We're going to be looking to be here with you again next week. And we hope that you are safe and healthy, and that you are right now enjoying this time with your family and creating memories that you never could have otherwise. So I think I won't answer any more questions. I'm going to say goodbye. If I missed your question, feel free to private message me or put it out on a forum. There's a lot of great people out on Bigger Pockets who can answer those. So thanks again. Thanks, Nikki. Thanks, Bigger Pockets. Thank you all. Can't wait to see you again next week. Take care.